Dear student, welcome to E-class of Sri Muthukumaraswamy College. Before going to my lesson, introduce myself. This is Dr. M. Sampath Kumar, Assistant Professor, Department of Bank Management. Now we are going to discuss about the corporate accounting. Unit of issue of shares. We have planned to study in this session introduction of the company, mobilization, share capital, meaning of share capital, consideration, account entry for issue of shares. There is three types of ownership. One is individual, second one is partnership, third one is a corporate. So individual proprietor means only one person contribute the capital to the business. That is called the individual ownership. Second one is partnership. More than two people, maximum 20 people contribute their capital to the business. That is called the partnership form. And third one is corporate company. It is uncountable ownership. That is called the shareholder. Now the corporate company, how they were collect their capital from the capital market, we are discussing. The corporate company decide to raise their capital through the issue of the shares. So where they were issued, how they were issued the shares. For that purpose, the government offering one platform that is called the capital market. In this market, all the corporate company sell their shares. The capital market controlled by the SEBI. SEBI is Stock Exchange Board of India. The corporate company, before going to issue their shares, must get the permission from the SEBI. After get the permission from SEBI, they were making draft the prospectus. The prospectus is a document issued by the company inviting the public and investor for the subscription of its securities. After complete the prospectus, they were deciding types of capital. Types of share capital. There is 5 types of share capital. One is authorized capital, second one is issued capital, third one is subscribed capital, fourth one is called up capital, and last one paid up capital. Now we are discuss one by one. Authorized capital is total number of shares. For example, 1 lakh is authorized share capital. Now the second stage of issued capital. Now the issued capital is part of authorized capital. It is 1 lakh authorized capital. Out of 1 lakh, only 90,000 issued share. The remaining 10,000 is unissued capital. Third one is subscribed capital. It is the part of issued capital. It is subscribed by the public. Only 90,000 we are issued to the public. Out of 90,000, the public subscribed only for 85,000. The remaining 5,000 is unsubscribed capital. Next one is called up capital. It is a part of subscribed capital. It is called the amount called by the company. It is paid by the shareholders. For example, subscribed capital 85,000. Out of 85,000, only 80,000 shareholder only called up. The 5,000 is uncalled capitals. Now the last stage of paid up capital. The paid up capital is the part of called up capital. It is amount paid by the shareholders. Sometimes some shareholder failed to pay. That is situation is called the call-in arrears. So paid up capital is called up capital 80,000. The paid up capital 79,000. So 1,000 share is unpaid. That is called the call-in arrears. Meaning of share and types. Share means a company raises capital by the issue of shares. The total capital of company is divided into smaller denomination. The each part is known as the shares. The capital divided by small unit, that is called the shares. The shares can be classified two types. One is preference share, second one is equity shares. The preference share is can enjoy to special rights, that is called the preference share. One is they have a preferential right to be paid dividend during the lifetime of the company. Second, rights, they have a preferential rights to the return of capital when the company goes into liquidation. This is special rights to enjoy the preference shareholders. Second one is equity share. Equity share, also known as ordinary share. Equity shareholder will get dividend and repayment of capital after meeting the claim of preference shareholders. There will be no fixed rate of dividend. That is called the equity shares. The corporate company issue of share at different value. There is a three way of issue of the shares. At par value, issue at premium, issue at a discount. Issue at par value, the equal to nominal value of shares. That is called the par value. At a premium means the share is more than nominal value of shares. Is called the premium. And last one is discount, means the share is less than the nominal value of that share. It is called at a discount. Next one is consideration of issue of shares. We must know about the consideration. The meaning of consideration. Consideration is the company provide the share to the investor in exchange of cash as consideration. For example, a corporate company sell their share certificate to the investor. Investor return payable by cash. The transaction is called the consideration. The consideration can be classified two types. One is a full consideration. Second one is installment consideration. Full consideration, the investor paid cash immediately. That is called the full consideration. Installment consideration, the investor paid cash step by step, such as calls. The four way, one is the application money, allotment money, first call and final call. When the corporate company issue the shares as installment basis, at the time they were collect their payment step by step. First step is share application money. Second step is share allotment money. Third one is first call money and final call money. These are all transactions. We are following some journal entries. Journal entry for issue of shares as installment basis. The installment basis, four stages there. One is application, allotment stage, first call and final call. Now this first stage of application money. Now the sale of application money, bank account data to share application account credit. Now the application money transferred to the capital account. Share application account data to share capital account credit. The first stage over. Next one, the allotment stage. The corporate company allotment to shareholders. Share allotment account data to share capital account credit. Now, fourth entry, the investor paid the allotment money. Bank account data to share allotment account credit. Allotment stage is over. Next, making first call. Share first call account data to share capital account credit. Now the investor paid the first call money to the company. Bank account data to share first call account credit. Now the first call is over. Again the company making second call. Share second call account data to share capital account credit. Now the investor paid the second call money to the company, bank account data to share capital account credit. These are all journal entry for the issue of the shares. Next session we are discuss problem with solution. Thank you.